Good morning, traders. It's 8:02 a.m. Chicago time on Wednesday, the 19th of July, 2023. This is episode number 2505. How are you doing this morning? How was yesterday for you? The rip up definitely wasn't great for me, but hopefully you did well and are feeling good this morning. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Let's hop right over into our convergent trading pre-market summary sheet here. Market posture, as you would expect, is mixed this morning with the NASDAQ continuing to drift higher. NASDAQ seeing some pretty decent lifting here right before the trader bite started after the numbers that came out this morning, which aren't really the catalyst here. But that's where we are today. We are right up against settlement across the board, pretty much. Earnings: Elevance Health, Volvo, Goldman Sachs this morning. I'll let you go look those up. I'm not going to spend too much time on earnings. We're in the thick of it. We have Tesla after the close. We have IBM, United Airlines, and Netflix. Tesla and Netflix being key here. And then other than that, really, what's on deck? The Fed remains in its blackout period as we prepare for next week's craziness. So we don't have much on that front. So it's really just earnings and equity news flow. The overnight session's been pretty quiet. UK inflation lower than expected, which is a boon here. US MBA mortgage applications higher than expected. US building permits lower. Microsoft announces new Copilot AI-powered office tool to cost $30 a month. That news, by the way, came out at about 10:19 Central yesterday, 10:19 Central, 11:19 Eastern, and it just caused a rip higher. I was discussing this in the Convergent Trading Mavens channel. Here's what Microsoft stock did yesterday. You could see the SOC for this at Microsoft is about 344 is the price. Further color on this, which I'll share with you here, since we're all a community, is that Microsoft is 13% of the NASDAQ and 7% of the SPX, which is the basis of the ES. So you can see here that the market really, the Microsoft news really pushed quite a few stocks higher in the tech sector. Before that, the NASDAQ was really struggling, and it was moving. Microsoft and the NASDAQ were moving in the same direction before it reversed and turned the other way. Pretty tough read, in my opinion. I was reading it. I was reading the NASDAQ as a very, very heavy seller presence, and until that news came out, and it just ripped the other way. Today we get the EIA crude oil stock change at 10:30 Eastern, and the expectation there for crude is a draw of 2.44 million. Last week was expected to be a draw as well, came in as a surplus of 5.946 million, almost 6 million barrels surplus week on week. Gasoline is expected as a draw of 1.577 million last week. I think we were expecting it as a draw of about 800,000, and it came in as a draw of just 30,000 barrels or so. So the numbers out of the energy complex have been a lot, the supply's been a lot higher than the prediction, pretty consistently. Other than that, you have a couple of other things. I won't spend time on that. Crude is popping higher today after retesting down. We'll talk about that in a minute. The ES is balanced this morning. We've traded 162,000 contracts with the inventory balanced, and the range is crap. 10.5 points in the overnight session, completely quiet, but the point of control really really high at 45.90. Market overall is accepting these higher prices. Let's take a look at what we've got here. Here's what's doing. Yesterday, we did have balance kind of. This is beautiful structure here. You have balance, then the market opens higher, retests the prior structure, doesn't quite get into balance, so that's a little weakness there. Naked point of control remaining. The next day opens up, tests higher, comes down, tags the point of control. That's beautiful structure there. Then we had Monday, which opened at the low end, pushed through to above the high of 45.60 from the prior session, but overall pretty balanced. You can see the point of control and the TPO point of control at the same price, about 45.50. Yesterday we opened and it tried to push lower. It tested down quite early to about 45. It opened around 45.50. Or at 45.50, so it moved lower and it tried to test the lower distribution from the prior day, and it really had a strong bid underneath it. There was quite a bit of order flow to the buy side yesterday in the ES, but at the same time the NASDAQ had quite a bit of order flow, selling, offering, a lot of icebergs on the highs. The 780 area was pretty firmly offered, and then the S&P started to make highs on the session, and the NASDAQ kept struggling at the same price, and then once that news came out, it just exploded to the upside. So what does that leave us with? It left us with a multi-distribution profile. This is a multi-distribution trend. This is a relatively strong trend when we have multiple distributions like this, but we do have weak structure. So the first weak structure beneath us is right here, and this is my over underline for today. So it's 45.83 to 85. We have some single prints there. Let's zoom in on the action here. Actually, I have a separate chart for this. So as we zoom in on the action, we see that there's some single prints right there between 45.83, 81 in this area here. I don't know why I keep saying 45.85. It's really 83 to 81. That's really the zone that matters. So we would want to see sellers come in and push through the 83 for there to be a consideration that that sellers are taking control. But there's quite a bit of defense here. We had a double TPO high at 79.50. This is a key. This area here, the 79.50, is a key support early on. If that goes away, we are very likely. So the box we're really concerned with is right here, and that goes from 83 to 79.50. As long as we remain above this price and this zone right here, as long as we remain above here, and we are well above it, we are likely to challenge the high. This is a relatively weak high. We one tick the high and we're back here. So this is considered now, instead of a failed auction high, we're considering this a weak high. So this is very likely to push through to the upside. If it takes out the 83, which starts the weak longs liquidating, but 79.50 presents pretty decent support. If we take out the 79.50 and start digging into the second distribution, there's another set of singles right here. Okay, if we start to dig into this this lower distribution, this may precipitate into selling very quickly, and in that case, we're aiming for 65, and you guessed it, 60. Those are the key structures beneath us. This chart here is RTH only, of course. We're not looking at the overnight session profile here, and you could see that yesterday, once it pulled back, one time framing up, higher low, 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 higher low into the close. Pretty strong close despite the pullback and one tick auction up there. Pretty strong structure. So we're looking at 4,600 as the next area up, and I have to, in the interest of consistency over the last 10 years, I have to come out and say that yesterday was a struggle for me. It's just absolute garbage amateur trading on my end. My view on the market was tainted by the idea by last Friday's structure, which the market rejected. The first, if I were paying attention and following the plan, which I was not, it happens, just too many distractions really, to be honest with you. The first trade was right here. Why is that first trade right there? Why would it be right there? What could be, we have this higher low. Why would we want to buy a lower low in this situation? The reason is it checked the prior day's range at the 65.75 and it went to 65.66. It actually did so on this bar, very, very small. If you look at a very, very short-term chart, you'll see it come back to 65.50 once it breached. It went to 68.50, then it went to 65.50, and remember the day before the high was 65.75, so 65.575, and it went to 550, and that's really the first chance at getting on the long. Why the long? The long is because the open was below us. We rejected the prior day's range. The day generated prices are all below us. Everything is below us. We breached the IB high. We had a range extension up, and we had an impulse on the push higher of 10.75 points. So this, ladies and gentlemen, is the classic setup to get long, right against the prior day's range. Very clear reference, very clear risk, and I was twiddling my thumbs through this. So the market jams up. We have an inside bar, and then the breakout could be traded of the inside bar right here. The break of this 76.75 area would be the secondary. Look for 79.50 to be breached. It was not on the first try, pulled back, gave us a double TPO high. I pointed this out in the chat room on Convergent Trading. 79.50 double top, and then it pulled back, and that gives you a fourth setup right there. Double TPO high, breach, pull back to the double TPO high for continuation. The problem was I just didn't see it kind of extending that far, and the Microsoft news and the news on the tech front was a much bigger catalyst than I would have imagined, and it just kept pushing higher. So for me to look at this and say, man, we're above 45.50 at these prices, we're in the earnings season, it looks like it's struggling to push higher. Let me buy a pullback. I just didn't have it in me yesterday, and that's not how you trade your plan. You don't trade on feeling. You don't trade on what you think the market is going to do, or anticipating what the market's going to do, and so on, that it might sell off, that I'm anticipating a sell-off. Instead, look at what it's actually doing and just trade that. Very, very hard to do. A lot of books and a lot of gurus talk about this. I'm here to tell you, 23 years trading, and I still have these lapses and struggles with this aspect of it. I'm just being honest with you, because it's not all wine and roses all the time. It's just the way that it is. Okay, so yesterday, very, very clear structure, but what this leaves us with is a very clear set of imperatives here first. This area has to be taken out by the sellers. The sellers' effort is to push back on the buyers, squeeze them, and make money on the way down. That's the seller's effort. But you can see the set of singles here into 79.50. This is the key area of defense that they need to take back. And then what we have below there is relatively weak structure with a secondary set of singles right down here against the 65 to 60. How convenient that is. The 65 to 60 brings us into the second base of defense right in here. So until that happens, I will see you at the new high here. That's what it looks like. So we are opening at 93.50. We're looking at 87.75 for a gap to settle trade. So that's one. The overnight high is just below. We're pushing the overnight high right now. It's just below yesterday's high. So this is quite bullish. Looking at let's move this out of the way. Put this on my other section. If we look at what we're doing right now, you can see there's been some pretty decent lifting in here into the 45.90, and we've taken out this overnight high, and are extending upwards towards this weak high from yesterday. So you can see that from 8 o'clock onwards, and this has been the case, by the way. I've noticed this over the last, I don't know, maybe 4 or 5 months. A lot of big moves originate right at the start of the trader bite, which is at 8 Central, 9 Eastern. So there's kind of a front run behavior that's going on when things are kind of obvious. This is obvious today. To me, the structure is quite obvious. After a day like yesterday, we tend to have really strong or really clear structure, and we're already attacking it. We're attacking it in the ES. We're attacking it in the NQ. You can see the bubbles right there. Same thing. Market starts to make its move at 8 o'clock, and it's the NQ has formed a weak high again, and it's likely to it's above the 16,000 here, the millennial figure, and it's likely to retry the 1630. The NQ has similar structure, by the way. Let's switch gears. So I gave you the plan for today. The plan for today is really long and strong unless those key areas are broken. The NQ had much more interesting structure down here. It struggled between 15,790 and 15,770. For those who traded, there was quite a bit that went off in this 15,780 area. This 80 area traded quite a bit yesterday. And then the Microsoft news came along, and boom, it exploded to the upside and started to form this very wide singles range with a good base. So if we look at the NASDAQ structure, just the overall auction structure, if we look at that, we'll notice that actually the NASDAQ doesn't have much structure to speak of below this, where the single prints begin. This 15,868 all the way down to about 816. So let's put those on here. 816 to 868 or so. Okay, this area right here is the base from which this thing launched. If it breaks down, if at some future point it breaks down and takes out this 68, 16 is very likely on deck. This is likely to provide some support, the 18, 16 to 20 area, but if it takes it back, we're going right back into balance, and the 15,780 gets back into play. The 15,780, which is very much a fought over area yesterday. From there, the NASDAQ structure is quite poor. Look at that. That is not good structure. The ES did a much better job of checking and rechecking its distributions the NASDAQ really didn't have very much of that going on. It just ran and ran and ran. And you can argue, and some will, that it's overextended, it's overdone, it's this and that. But unless we see that, unless we see it start to take out single prints, the upper single print, so it starts up here. So if we have a gap to settle trade back down to 974 and it doesn't hold and it starts to breach the 970 and work its way down, then I'll believe you. Then it'll look extended, and it's very likely to kind of flow downwards quite quickly. It's one of those things where we come in, we're like, wow, what happened? It took back that whole day. It just took back everything it did on Tuesday. Yes, very, very possible for it to do that. The move, as I said on Microsoft, is an SOC move. It occurred at 344 on Microsoft. This is the SOC. It's a little bit more, to be more accurate, it's like 44.15, call it. This is the SOC in Microsoft, and this is a news-based move. You can see it pulled back to the anchored VWAP right there. This is a news-based move, lower high structure, and it just broke down. But, you know, because it's a news-based move, I have to sit here and go, okay, what happens? What if this structure gives in? And if it does give in, it leaves it with very little to hold it together all the way down into the 15.8, 1620, and then the key number becomes 15.780. So if you're trading the NASDAQ, those are the key areas for today. As long as it, you know, it might pull back here. You can see there's a collisions cluster right in the 16,000. We have the millennium figure here. As long as it kind of holds above this 968 area or so, it is very, very likely to continue to push, squeeze into the upper 16,000s, probably 16,120 or so above in the NASDAQ. 16,120, next key area I have in the NQ. But unless it gives this structure up, which is much more exciting, this would be a much, much easier trade in my opinion. When it gives up this set of singles, unless it gives that up, you're looking at a grind. You're looking at low volume rallies continuing, and it's just you know, it's just summer rally trading, and that's all there is to it. So there's that. Is that confusing? So that's the NASDAQ. The CL, just a quick look. Remember yesterday I said this thing really extended itself. The 76 was key, 74 is key, 72 is the MC point of control and mid, and 70 is the lower distribution. So the 70, you can see it right there, 72 right here, 74 right there. So this is your balance zone. And what we did is we pushed through and we squeezed higher, and then we fell through. And I talked about, hey, this is likely to test the 74. Went to 73.92. That's how precise it is. And I said, if it doesn't hold it yesterday, if it doesn't hold that low and starts to push, we're looking at 72 for a nice, decent squeeze to the downside. It held it. It really downticked maybe a couple of ticks. It put in a low of, get this, 73.99 before rallying back up to 76. So it went from 74 to 76 in one sweep, and we're back at the top end. So given this action that we retested the top of balance, this is very likely to continue higher into 77 at this point. Remember, we're trading the September contract in crude. We rolled yesterday. That's what crude's got going on. Let me know what you think of the coverage that I'm providing here to you. It's important to me to make sure that you're keep tracking along nicely. If you're completely lost, let me know, and we'll try to break it down a little further. We don't have much time These sessions are supposed to be 15 minutes and I run 20 to 25 minutes pretty regularly. Just let me know if this seems like gibberish to you, and we'll see if we can break it down further. Maybe do another AMA or something. Good luck, and I'll catch you. Oh, by the way, don't forget that the
Picking up on an earlier release,
sale at Convergent Trading for the summer. Summer, it's usually slow. There's usually a dip, so this is a good time to have a sale. This is why we're doing it. Summer sale is ending at the end of this month. The URL to go check it out is go2ct.pro/summer20, 20% off a quarterly membership for returning or new members. If you want to check it out, this ends at the end of the month. Okay, good luck.